So thank you first for agreeing to do this. I know how busy you are, even in these COVID times with all the board meetings and everything that's on. I used to say even before COVID that being a public sector banker in India is a very tough job. And contrary to popular perception, because most people think it's a cushy job, etc., easy, very little responsibility. But I've always maintained that it's a tough job. With COVID-19, this tough job has become almost impossible. What, according to you, is the single largest challenge that Indian bankers are facing in today's environment, sir?
Well, thank you, Kaushal, and thanks the entire team of Rubix Data Science and the participants for taking out time. Let me first wish that all of you are hell and hearty in the given challenges. That's most important for all of us. Uh, Let me tell you, friends, that I'm going to share my views as a practitioner in the banking. I've been in the banking field for almost 39 years, out of which I must be in the field for over 30 years. When I say field, as branch manager, regional manager, zonal manager, besides the administrative office postings. And please don't take my replies as biased to banking or defending banks. I will do a lot of balancing act, and feel free to address your issues. When Kaushal, you talk about the single largest challenge for a public sector bank, let me tell you that a little background is a must, that how the banks have evolved. I will not take into big history, but I'll touch this certain milestones in the Indian economy. Uh, and as I strongly believe, and everybody says that banking is a lifeline of economy, how the banking industry has supported every such milestone event. Let's talk of 1991. I think everyone knows about that 1991 was the toughest time. And I remember as a branch manager, we used to collect the deposit at 17% and lend at 21%. I think today's generation cannot probably believe that. But yes, that was the scenario. But thanks to the various reforms on the liberalization, privatization, globalization, and all this has happened because the banking industry has been able to support whatever the reforms were wanting us to do. So I will not take you back to the nationalization, but this is what we have done. Come to the 2002, let me tell you, in 2002, when the complete implementation of the Basel Committee norms, the risk norms were implemented, the NPAs of the banking industry were as high as 12 to 13% or maybe more. And I remember that was the first time when Reserve Bank brought in the one-time settlement, non-discretionary, non-discriminatory. And from that journey up to the global meltdown in 2008-9, the NPAs had come down to as low as 2%. And again, the global meltdown, let me tell you, if those who, I'm sure the participants should remember that in 2008-9, again, it is the banking industry who have helped the complete restructuring of the industrial portfolios. There was again a one-time restructuring which was introduced by the Reserve Bank of India, and there's so much follow-up that weekly database was to be provided to the government, how many units you have supported. I'm sure people also should remember that there was a time in 2004-5, banks were called the lazy banker because the credit deposit ratio used to be for 50% or 55%. From that on, when you look at the credit growth from 2009 to 2011, when the country wanted to grow or take the GDP at the rate of 10% plus or double-digit GDP, I think the credit growth used to be at the 22% CAGR for 3 years at least. I mean, those are the situations when the banks have gone through. Uh, Obviously, this situation is a little different, no doubt about it, little longer. It has created a lot of uncertainties. And thus, the biggest challenge for the banking industry as of today, I personally feel that when banking is seen as a lifeline of the economy, how can you do a healthy credit expansion which can only boost the economy of the country? So when I say the healthy credit expansion, it's very, very important that I manage my existing portfolio. I create a new portfolio which should be healthy. How do I really look at those uncertainties in short term and medium term and do the credit expansion? That is the biggest challenge. You must be seeing last 15 days or 1 month after the RBI, everybody is talking about the credit aversion in the banking. And my biggest challenge is that am I credit averse or am I credit conscious?
Absolutely.
It needs to be, perceived in a very different way. The aversion, every day the newspaper throws lot many things on the health of the banking industry. The taxpayers' money is going in capitalization of banks, so on and so forth. So the biggest challenge is that in such a scenario, how do I survive? And I think those challenges, I'm very confident that as we have been meeting in the past, we will be able to make it.
So that answer actually leads me, and folks, just before I go on, all of you have questions. You'll see a Q&A tab on your screen. Please type in your Q&As, questions there. I'll be sure to ask Mr. Tanksale the question. Just identify yourself, your organization, if possible, makes it easier and gives him context. So if you do that, I'd be very grateful. There's a Q&A tab, just put it in there. So the most important question.
So those who could not listen to me, let me once again say with confidence that banking is here to support the credit expansion and thereby the growth in the economy.
Perfect.
To my next question, which is when will lending start in today's environment? Corporates and MSMEs, and you said the media are constantly talking about the fact that liquidity is extremely tight and they are not getting funding from the banks. On the other side, sir, I was just checking, on the other hand, banks have nearly 8 lakh crores, sir, parked with the RBI. The finance ministry has tweeted on May the 12th that, not the finance minister, the finance ministry has tweeted on May the 12th that public sector banks have sanctioned 5.95 lakh crores between March the 1st and May the 8th. So in about 2 months. In fact, in the press conferences of the ministry, they have said industry is deferring borrowings into the future. What is the reality, sir? In one line, are borrowers not borrowing or are lenders not lending? My question is one line, not the other. Are borrowers not borrowing or are lenders not lending, sir?
There cannot be one line answer to it, Kaushal.
Absolutely.
There has to be a little expansion on this. No banker will park the money with Reserve Bank by choice, because I'm here to take care of the stakeholders' interest, that is creation of the wealth. It means sufficient capital for me to grow, and in that event, probably parking of fund is definitely not a choice but a compulsion. Let me give a perspective that today the banking industry size is 130 lakh crore deposits and 100 crore advances. So 8 lakh crore liquidity, just 8% of the total loan book of the banking industry. It will get absorbed fast. Let me tell you, it's not a big money that you feel. In any case, 3 lakh crore, you are all saying that probably it's going to be disbursed shortly. Here, the question is that if you ask me, let's start from the promoter side. Which promoter is ready to invest his liquidity if he's not certain about what is going to happen tomorrow? What is the opportunity for me? So in a short term, it is going to be difficult. But yes, I expect that people should prepare themselves for medium term investments, and the businessman should invest on a medium term, and banks will come forward to lend for the medium term. There is no question of banks not lending. Let me tell you that much before all this being talked about, you all should appreciate that much before the 20% or this emergency line of credit has been declared, every bank has declared the 10% additional support to all standard accounts on 27th of March. On 27th March, each bank has declared the scheme whereby they are giving the support for up to 100 crores. It means if there is a borrower having a limit of 1000 crore, they may get 10% of that. I think every bank would have put a different limit. State Bank said, I will fund up to 100 crore under the COVID stress. So there is no question of banks not lending. The only issue is that today, whatever lending you are doing, is it going for a productive activity? How do you look at its application, the end use of the money, and the cash flow as a return from the investment? I think because of those uncertainties, these things are not getting very visible. But I feel that as things are little easing out, I have personally checked with my colleague from the industry. They are open and they are entertaining the proposals. And let me tell you the biggest problem, you attend any webinar where banker is there, he will only say that the basic tenets of the banking, that is the trust and mutual confidence between the bank and the borrower. Let me tell you, I have been in the field for all these years. Out of that, in Mumbai for a long, from 1994 to 2008, I was in the field. It's if the bankers are not partnering with the borrower, banker cannot understand the business. I'm not a lender. I'm a partner with 75%. And thus, I do a good assessment. The only thing I must get a good opportunity, good measurable, predictable databases to establish that, yes, it is a potentially viable activity for me to lend.
Right, sir. So you're saying that it will cut back. So, I mean, lending will start. It will come back.
It will start. It will start. Let me tell you that, as I said, that parking with Reserve Bank is not a choice. It's a compulsion because you do have a liquidity. Where do I do it?
So
if the credit demand, if the demand builds up, the bankers will. And you must be knowing, last couple of days, every bank is talking that this is the time when we should be allowed to do one-time restructuring.
Correct. Exactly.
So that and that one-time restructuring is required with a caveat from the regulator that we will not treat it as a asset classification from standard to NPA, because that is a provisioning burden on them. So like they have, it was done in the past, like the SMEs have been permitted one-time structuring some time back in the month of October. I think that should come forward. And it is true that every businessman had to incur a fixed cost without any production for last 2 months. And they might have to incur this cost till there is optimal production in next 3 months of time.
Exactly.
So it means the 5 months of time till I reach to the optimal production level, it is a fixed cost for me. It is a non-productive cost for me. And it has to be supported through a deep restructuring. I think that is the answer. If that happens, the money will flow.
Thank you, sir. Thank you. So, sir, on May 22nd, RBI cut the repo rate, sir, by 40 bips. So the repo rate is now down to 4% from 4.4% earlier. And this was done out of turn, nearly a fortnight before the scheduled meeting of the MPC. What do you think prompted this sudden cut? I mean, aren't we seeing sort of diminished enthusiasm for rate cuts? Even the markets, which are the equity markets, which otherwise would celebrate that, did not celebrate. What could that logic be? And do you think that it will work in terms of pushing credit offtakes?
See, primarily, I will request that one must read the release of the RBI of that day, where they talk of the global economy, the domestic economy, and the objective. So the basic objective of the MPC, that is Monetary Policy Committee, is to address the midterm commitment of containing inflation rates. And you all will agree that it's going to be tough time demand will get pushed immediately on the consumer side, but supplies will not be there. So you have to look at the inflation part. So that was one thing which I feel that they thought that this will probably to some extent reduce the cost of operations if the proper transmission happens. Now you have seen the impact of the transmission. State Bank has reduced the rate of interest on depositors. Now, now basically the deposits are my raw material. It's my working capital. And if the depositor do not get the respectable rate to match the inflation, then probably that is another challenge. So given that, I feel that the primary job of Reserve Bank of India is to do a confidence building in an environment, in a financial system. And I feel that this out of turn is only share of supporting the confidence building activities which are happening on the part of the government by declaring Atmanirbhar, by regulators coming forward with all kind of forbearances. So there is a great need of a confidence building. To me, it appears to be more of a confidence building measure than pushing the banks for, as I said, that banks do not park the money with the Reserve Bank as a choice. It's only a compulsion.
So I'll interject here a little bit because my Q&A box, there are lots of questions coming in around, and very interestingly around saying that, while these announcements are made, so Mr. Mir Contractor has asked this from Neil Kamal, Mr. Vinay Thadani from ABC, that, you've got all these policies being announced, but when you talk to the bankers on the ground in the branches, and at the industrial finance branches or the MCGs, there is almost some degree of confusion about the process, the paperwork. Everyone says we are awaiting instructions from someone. How long do you think, and what steps can be taken in order to improve this? Because at the end of the day, the folks attending the call, we have bankers. Of course, many of banker friends are here. Equally, we have a lot of business people on this call. And I'm just saying that the business folks are feeling sometimes at this point of time when their guys go to the bank, etc., that there's a lack of clarity around process, around this. Everyone's waiting for instructions. How long, sir, before this gets sorted out, and what can be done in order to make this move quicker?
Yeah. So let's segregate this into two. One is what has been declared in the Atmanirbhar, that is 3 lakh crore MSME support, what has been declared. And the life does not stop there. The real game is supporting the borrowers whose borrowing is about 25 crores also. Because I am of a strong belief that the MSMEs cannot survive by itself if the large corporates do not survive. If the OEM does not survive, how does the supply chain survives? So in a supply chain, as a banker, I must ensure that the entire supply chain is really intact. Having said that, I repeat again, when you said industrial finance branch, the proposals, I'm very sure they are not of the emergency line of credit, but they are the normal line of credit. The basic guidelines have already been given by the bank in the March last week that 10% additional credit limits will be considered for every standard account. Now, today, if you read the newspaper about even the emergency line of credit, now in the guidelines, it has come that yes, pre-approved credit will be communicated to the borrower, but the bankers are responsible to do the due diligence to ensure that it is used properly. Now tell me, I mean, unfortunately, the first declaration gives a feel to the MSMEs that money is available to in my account.
Exactly.
Money will be made to you available in the account, probably unlike our system of giving credit to the supplier. If it is a working capital limit, if it is for meeting labor payment, if it is for meeting electricity expenses or any operation, it has got to be credited in the account. The issue is that here the trust and transparency will matter a lot. And let me tell you that bankers will slightly go by their own experience of the existing account, how they have been conducting themselves in the past. That will make a lot of difference. You are from the credit risk management side, Kaushal. So you all understand that it is the behavior and the pattern uh, which builds the trust and the confidence, and that decides the credit decision. Having said that, with regard to the this emergency line of credit, the clear-cut guidelines have been issued by the SIDB, how it will be operational. The individual banks have issued. I've got 2 circulars because I knew that this will be required for me to answer. I got 2 circulars from 2 of my previous banks, Union Bank and Central Bank, that they have issued the guidelines to the branches that this is how they'll be doing it, where clarity has been given that the amount should be credited to their account. However, that however is one thing where borrowers have got a larger role to play. Please go to your banks with total transparency. Please go to your banks, express your different problems in the past. Now today, I don't know how many of you have seen the PwC report. The PwC report has come that the going forward, it will lead to a lot of economic frauds and crimes because of this. And the Fitch has expressed that 600 basis point will come down because of this. So
impairment, the impairment, yes.
Yeah. So all this is, let me tell you, I'm a banker of 70s, and I totally believe that if there is a mutual trust and confidence and transparency, every business can be supported. Businesses will have problems. You will have internal problems, you will have external problems, but if they are addressable, so I put these questions into 2. Whether the business has got a liquidity problem or business has a solvency problem.
Correct.
If it is a liquidity problem, it will be very well addressed by the bankers because that's his cup of tea. If it is a solvency problem where other stakeholders are into picture, where survival, non-survival, potential survival, in what timelines, all those things are related to various other things. I think their bankers will take little time. That is what is my take on this question.
So, sir, if you look at it in this tough environment, like you said to go to bankers with, as you said, transparently, as the courts would say, with clean hands, approach the court with clean hands, and say what, so what are the 2 or 3 things, the 2 or 3 items, things, actions that bankers are looking for borrowers to do in this tough environment? If you were to tell the business folks on this chat, do these 2 or 3 things when you go to the bankers to give them comfort, what are those 2 or 3 things that you would look at, sir?
Say, I would like to be very forthright in saying that when the going is good, everyone has got a grit to grow. And I use the funds available to me left, right, and center for business and non-business purposes. Maybe diversion businesses in the business itself. So what happens that when going is good, I feel that chalta hai yaar, I will be able to make it up, no issues on that. So when I said transparency, fine. If there were issues, come out with your liquidity numbers very clearly. I mean, that's the primary thing which I must come out with your liquidity things very clearly. Come out with your inventories very clearly, because that is one area where
obviously there is always.
I don't have to say much about it. I'm sorry. I mean, don't drag me into the wrong things, my participants. But I mean, the areas where a lot of question marks are put are this. And in these areas where the whole balance sheet is built up around that, and I again repeat, bankers are the partners in the credit life cycle of a borrower. I cannot distance myself when you're in difficulty, provided the difficulties are really told to me in good time and there is a solution available to me. So the solution should be very, very clear. Unfortunately, in today's situation, those kind of a predictability or measurability is not available, which I feel maybe in a month or 2 months time should sort it out. So what people should do, I strongly recommend to those who are participating as a business class here, first work for your survival. That how can you really ensure, because one good thing which I heard from Mr. Dr. Subbarao, then Meghnath Desai, then Moteksik Ahluwalia, everybody had said one good thing. This is not a calamity. Everything is intact except few humans have died. The activities are frozen. Your capital is intact in terms of what capacities you have created. Your except what would happen in Calcutta or
Sure,
Odisha.
those
Because,
are.
so I mean, those are not the natural disasters. This is not a natural. Everything is intact. The only thing, how do you create a good demand? By pushing the consumption, by making the money available at the hands, which is a little time consuming affair. So I propose everybody, you must work for how next 6 months I can really manage the show very well and then prepare myself. And in the process, I think every businessman will have to think on their processes, on the cost efficiencies, the way they can do the cost management, they can improve the processes. Say what happens, again I say, when going is good, we feel yeah, chalta hai. Abhi everybody is talking, even bankers are talking कि यार हम 25%, 30% work from home कराएंगे, I save a cost. I am worried what will happen to the office real estate spaces. There may not be demand. So all those things are there where I think if both the parties work together, I have no reason to believe that it can't be held out.
So, I'm glad you're optimistic, sir. So, the government announced this 20 lakh crore package. I'm not going to quibble, sir, about whether it is what percentage of GDP is. People are saying it's 1%, government said 10%. Those are things we know that these things happen, sir. What I want to ask you for our attendees, both bankers as well as for the business people on this call who are attending, what are the most important schemes from the stimulus that are useful for industry and business?
So I will take three things out of the complete package. The first thing, although these are the liquidity measures, but they are very, very, very important. Even 1% cut on CRR gives me 2 lakh crores. So the measures which are taken for liquidity, which has given the total support of 7 to 8 lakh crores, is the first thing which I feel is a very good move, so that bankers cannot complain that I don't have a liquidity to support the credit expansion. Now, it does not mean that I've got the money and I just deposit somewhere. It means I cautiously, properly deploy it wherever it required for the growth of the industry, or not growth, first survival and then supporting the growth. So I think that is one thing we should appreciate. This is not a money in the hands of the people, and thus it is not going to really boost the consumption. See, the whole idea or
absolutely
whole,
demand side.
Correct. Yeah. But what you are creating, you're creating the supply side. That yes, supply side is intact. I'm ensuring the liquidity is available. Water funds are required. So out of this 3 lakh crore, you can't add 8 plus 3. This 3 will go out of this 8 only. Am I right?
Correct.
The only thing that this 3 is supported by the government, by the credit guarantee scheme, where bankers have been given the comfort, you take the risk. Don't be risk averse, but risk cautious. But take the risk. And I'm very sure that bankers will definitely use this opportunity using their prudence. They have to address the bankers. I only wish that bankers stick to certain timelines in disposing such cases. In the name of due diligence, you should not take 2 weeks and 5 weeks. If it is to be, can be done in 3 days or 5 days, you are supporting the existing standard accounts. You are not supporting even the SMA 2, which is 60 days default. You are supporting, which is within 60 days. So you already know your existing clients very well. And in that situation, what you need to do is that this 20% additional limit, how is it going to be used? Is it going for a working capital? Is it going to meet the non-productive cost to sustain for the next 3 months? Is it going to be used for a certain capex, which is necessary in today's context? So all those things, in any case, any lender will have to look at. Say today, 20% of 25 crore means 5 crore.
Correct.
Now, if any new proposal of 5 crore is to be done, do you mean to say it will be done just like that? No.
No,
So
can't be.
the only thing I only propose and request my bankers that this is a crisis time. Make sure that you understand your borrower fast and support it. Today, luckily, so much database is available to know your client well. Credit bureaus are there, Rubix data science is there.
Absolutely.
So knowing your borrower from the external data points is much easier as compared to what we have faced. We didn't have any access to the external databases.
Correct.
So that is my, and third is I'm very happy on the discom side. Let me tell you, that was the biggest pain for the bankers,
Correct.
which have been suffering for years together. I was chairman in 2011, and since thereon I am seeing these issues of discoms. So if the power availability is not ensured, the whole game will stop.
Correct.
And thus, if you are supporting the discom with that 90,000 crore, in addition to that, very rightly, the support has come for subdates and equity, and those should be nicely utilized. That is what is my expectation.
Thank you, sir. So I want to move for a moment, and there's some questions that have come in around trade finance, especially on the export side, sir. So we are seeing cascading bankruptcies, sir, overseas, including in the US, where we've seen 60 large companies such as JCPenney, J. Crew, all of them going under bankruptcy protection. In fact, Altman has said, and I've talked about it, the creator of the Z-score has said that 165 bankruptcies in the US with over $100 million worth of liabilities are projected for this year. So what is your advice for Indian exporters and Indian bankers who are doing export finance under this scenario? Because the situation is a mess.
Yeah. So I will first recommend that read Kaushal's recommendation on the Professor Edward Altman report. What he said that 2022 is going to see the record bankruptcies, and there is a credit risk explosion, there is a supply risk explosion. I mean, that's a good report which people must read, because I believe that all the participants are on LinkedIn with you, and you have rightly put on the right day this, which I could also pip through. I've been in this market for long as a branch manager in 1996 and 1997. Those who were in the business, they should remember the exchange crisis which had occurred in the Asian countries, and the rupee had gone right from 40 to 68 or something. And my primary suggestion to all the exporters or those into the cross-border businesses, please remain hedged. Unfortunately, I knew that every importer would like the rupee to strengthen, and every exporter would like rupee to weaken. And I like to keep my exposures open. So my first suggestion, that there is so much of uncertainty, you can't predict the way the things are going to be. So first suggestion is, please remain hedged. The government has given you 15 months time for export realization, but what is going to happen in 15 months with your counterparty? So my second suggestion is that how are you going to understand the position of your counterparty dynamically? It's not only the counterparty, but the counterparty country. I remember that in my days of branch manager in the overseas branch, we were very particular about the country risk also. It was not only the so I will suggest that every exporter, and I'm very happy that the export commercial councils, the FIO, various credit rating agencies, they feed a lot of good information on the
ECGC Limited. ECGC also has very good
correct, the country rating.
Yeah.
While country rating will give a broad picture, I think it is very important for you to know your counterparty on a dynamic basis. And that is the most important. How do you know your counterparty dynamic basis? How you invest in sourcing the credit reports on them? There are various options available. I will not market Rubix here.
Uh,
But my 3 points are very, very important for a trade finance people. Is that one is that hedge yourself against the volatile exchange risk. 2, country risk, and third is a credit risk on your counterparty. Having said that, at your end, I think you must also see that what are the opportunities going to get created. I very strongly believe that what is being talked about China and India, there could be huge opportunities. Say we have lost a lot of opportunity. You talked of JC Penney. In my days, if any exporter was impaneled with JC Penney, I would blindly give him money.
Correct.
If a
Absolutely.
garment exporter, I used to travel frequently to Tirupur and all that.
Yeah.
And JC Penney, अरे यार ये JC Penney को supply करता है, दे दो. But today you really you can't take the things for granted. And having said that, I feel that there will be a lot of opportunities for the new products which will move from one country to the other country because of various reasons. The only thing that I have been a banker in the days of PSCFC and all those things when the lot of support was given by the government. Today also there is a subvention available. But forget about subvention part. Look at the opportunities. And I am very confident that for trade finance, cross-border, Indian markets will have good opportunities because one good thing that Indians are known for their consistency and credibility. If they commit, they supply.
which is a big thing in these days, sir.
Yeah,
Which
yeah.
is an
I mean,
absolutely big-
that is most credible part. And all said and done, we are known for having a skilled labor. We are known for now the labor cost in China has gone manifold as compared to India.
Correct.
Yeah, if
Correct.
that's the case,
Absolutely.
I know that a couple of my diamond units started moving to China in those days because the cost was low. Many garment units moved to Bangladesh because the cost was low. I think the same
Absolutely.
cycle is now coming to your favor. Look at that opportunity. I think these are my
So
few suggestions.
one big thing that's happened over the last, I think, in May itself, this month, on May 17, the government announced that insolvency proceedings, the IBC would be suspended for 1 year. Some people jumped on the bandwagon, experts, and said this is a great move. Others are concerned that it will only, sort of delay the inevitable, create a logjam of insolvencies, create fraud, create a whole bunch of other things in the future. So what is your view about this move to suspend the insolvency proceedings for a year, sir?
So I will slightly take a longer time here because I had an opportunity to make presentation to the parliamentary committee before the IBC code came into being as a chief executive of IBA. And as I said that I was a part of international banking for a long, and I knew Chapter 11 right from my early days of 94, 95. So if you look at the Chapter 11, which is very popular in US, and I'm sure all those who are into export business or cross-border business, they know it very well. Here, the companies were going to the Chapter 11 that look here, now I'm not able to sustain the business. And thus, I would like to have a resolution. In our systems, without saying anything negative, none of our businessmen given a choice would like to give or he will remain stuck to the business. वो क्या कहेगा, समाज क्या कहेगा, फला क्या होगा. So I never have the philosophy of exiting. So IBC is not only for the bankers. It is for both the parties. But what has happened that when the IBC code came into being and many cases got referred there, the biggest blow which banking industry got is the biggest haircuts. And let me tell you that given a chance, given those haircuts, bankers would like to see that whether they can resolve out of the IBC. If I can resolve it better, if I can realize it better. But this 1 year suspension will have one positive effect, that the good units will not have the impact. The 1 lakh limit extended to 1 crore, the smaller units will not have impact. There will not be the game playing to bother the corporates by throwing one application into the NCLT.
Yeah,
I mean, these are all positives. But the negatives is that you are deferring the D-Day. If
exactly.
you are, I'm very clear on this part. There was no need to defer it. The only thing that it should have been seen properly, that it is not good, put to misuse, and that misuse is protected. But if it is to be addressed today, it should be addressed today. If you are deferring a D-Day, then you are accumulating more problems for the bankers and for the promoters both. And I feel again the answer to that is one-time restructuring with the forbearance of maintaining the asset quality as standard probably could be the answer going forward. But I think it is for the regulators. This is what the IB has also probably recommended. Let's see.
So you're suggesting that you do an OTS without having and keeping the asset quality standard, so that there is no provisioning change, and therefore
Correct.
banks are, banks don't have
Not
to
OTS. I do structuring. OTS is a
okay,
settlement. I do
right,
structuring.
structuring. Okay,
Yeah.
structuring.
See what has happened. See, bankers have to do a lot of balancing act between the provisioning and supporting the unit. If I am required to support as well as provide, and then starve of capital and cut my growth, then I'm not able to do a good job. If I am
Right.
allowed to support and also protect myself on the capital side so that I am surviving for growth, I think that works better. The only thing which I would further add is that cultural change which should come in the country is about when to exit and when to look for a proper solution at the proper time. If you say, let me tell you, I'm very sorry to say, but most of the NPAs when we look at, they get declared NPAs when it is beyond repairs.
Yeah, it's in the graveyard
So,
and beyond.
if you say the NPA in 90 days is beyond repair, itself is wrong.
I would agree.
I mean, nothing,
Absolutely.
the heavens do not fall in 90 days. So, I mean, I defer the D-Day, and and that is why this deferment of 1 year to me will be detrimental rather than doing many positives. That's
So,
my take.
as my economics professor used to say for these things, says that you're just kicking the can down the road. So I think, my worry is that we have collectively kicked the can down the road here, but time will tell, sir. So I have a question from a couple of startups, actually two of them, and both are saying that they're getting problems in getting credit facility under various MSME schemes. One is a company which makes lifestyle products with an annual sale of about 3.5 crores. They've been in business for 2 years, and saying that we're getting great traction in India and overseas, etc. But obviously, because of the stage we are at, we are loss making. We are a startup. We are investing in product development, etc. Another one is similar. One is in the electronics industry where someone has put his life savings into setting up a unit in India. Now the question is that in the first couple of years you can't break even. When you apply for an MSME loan right now, the banks, even under that PSB loan scheme, etc., says that we can consider your case only if you're profit making. So in this situation, how can these MSMEs get some kind of banking support under these schemes that the government has started?
See, I would say that it's not an issue of lending, it's an issue of equity raising. Because say for all startups, the biggest problem is that you have to burn the cash for initial period till you get into the profitability. Now, no lender can be called a venture capitalist.
there are two different activities. There is a activity of a venture capitalist and there is activity of a lender. Lender comes into picture when the venture capitalist has already got into it. So to me, I read this question when you mailed me. My suggestion to these friends will be that now in this present dispensation, the government has spoken about two things. One is the fund of fund, about 50,000 crore for equity infusions, and some 20,000 crore for the sub dates to be given. Now, I don't think that the detailed guidelines have come on fund of funds and sub dates. If those guidelines, but SIDBI has got a venture capital wing. I think the startups will have to go to the venture capitalist before they look at the lender. But the only thing which I will suggest that at this point of time, if I am sure you are already banking with somebody. Now, whether that banker can get any other kind of a risk mitigant, that because ultimately you have to service the interest. If you are not making profit, you will service interest out of capital. So how do I justify my lending and servicing of the debt? I can give moratorium. So if the banks can come out with a scheme of moratorium for startups in terms of interest being capitalized for 3 years and repayment scheduled after 3 years, which to me looks to be a little difficult proposition. But if it is a good mix of venture capitalist and lending, I think there is some possibility of getting a support. But I think the startups have those issues, and there is no direct solution from the bankers alone for this.
Kaushal, you're on mute.
Ha. Kaushal,
Sorry.
ha.
Yeah, thank you, sir. Thank you.
Yeah.
So there's a question that's come from someone around moratorium. Says that in the market for lending, 30 to 35% of the credit is in NBFCs, and currently there's the various numbers who have opted for moratorium. What is your view on how NBFCs will be supported, as they've been responsible significantly also for credit expansion and bringing credit to sort of parts of the unbanked population? So what can be done to strengthen them?
See, I think in the package and in the liquidity package where TLTRO has been specified for the NBFC and HFCs, the only catch here is I'm a proponent if the NBFC is giving a moratorium, and if he has borrowed from a bank must give back-to-back moratorium for that portfolio which is assigned to the bank.
Correct.
Because I'm very sure for every borrowing from a bank, I assign a portfolio. And when I assign a portfolio, and if that portfolio I'm required to give a moratorium, there is no way that I can give the EMI to the bank. And thus banks must give the moratorium to the NBFCs for that back-to-back piece. Now that back-to-back piece, how do you establish between the two of you, that is bank and the NBFC? But I think the TLTRO, which has been specially created for supporting NBFCs, where it has been very clearly said, even the non-rated NBFC should be supported. So I think the banks will take a call, because ultimately that portfolio is assigned to the bank. I can't expect, when you are not able to recover, when you have given the moratorium,
Correct.
how do I expect you to?
Correct.
That is my take, which should happen. If I were in a chair, I would have taken that decision.
So there's a question from Mr. Rajan Sharma, who's asking that when, from a company's point of view, what benefits or what facilities can they ask for bank, especially in this time when liquidity collection is an issue, and he's saying ideas like channel financing, etc. So what are the things that someone with liquidity strapped, because of being unable to collect? You talked about that even in the NBFC context. I'm not able to collect. Collection is, we're seeing a huge liquidity challenge across all the companies that we assess at Rubix. So what are the sort of facilities that they
No,
can ask for, sir?
yeah, yeah. You are not clear. You will have to repeat. Last
What,
part you were not
yeah,
clear.
what kind of facilities, including channel financing, can units go and ask, or companies go and ask for banks right now when liquidity is a bit of a challenge? So what can be some alternate sort of thing that comes into
So,
play?
as I said, the bankers have already opened up a channel for supporting the liquidity to the extent of 10% of the limit. Even if it is a MSME, it will be 10 plus 20. If it is other than MSME, 10% is already declared by the banks. Now, I don't see a reason that you will not get a support, but don't expect a structured product to be available. That, oh, here is a structured product and this is how it will use. Because supply chain is again a very broad and generic term I'm using. I should be very specific. Look here, I'm your client. This is my track record of last 12 months, 24 months, 36 months. These are my business constraints. These constraints will prevail for the next 3 months. It means I have to survive myself for 3 months. So in these 3 months, I need or survival support. When I say survival support, I have to pay salaries, I have to pay electricity, every kind of operational cost which I have to incur, whether production is there or not, I have to do. The second part is that if you are looking for that your receivable should be financed, I think receivable finance, every bank does it under the working capital facilities. If it is not happening as per the norm, then look for the trades kind of a thing. If you are under MSME, where the invoice financing is happening. So there are avenues available. My only worry and my suggestion to my participants, don't look for something because of the COVID, I'll get something ready-made available to me. I have told you that the bankers have supported and have been supporting and will support if there is a genuine credit requirement and when the viability of the unit going forward can be established in the short and medium term. Not short term, sorry, medium term.
So there is a contrarian question. I really like the question.
I welcome it. No,
yes.
no
So
problem.
Mr. Swar, no, it says that with the public sector banks already having such high NPA rates, GNPA gross NPA rates, is it a wise move to push them for more unsecured lending to MSMEs and farmers during these times, considering that the bulk of the stimulus depends on PSB lending? So will we see more kicking the can down the road, more default down the road, because the government is forcing the banks to lend to these during COVID times? I think I know what you will say, but I'd love to get your
No,
view
no,
for
no,
everybody.
no. I'm very clear that yes, I know that MSME portfolio is 18 lakh crore and 18% is the NPA. That is the number. And the only thing which I am again sounding that if this additional 3 lakh crore, if it is judiciously used by the customers, and if you come back to a break-even level, absolutely fine. If you don't come back to break-even level, the credit guarantee is available to you. So somewhere, I say, is there any way that the money could, the banks will have to absorb this on their books? Nothing wrong about it. The only thing that the commitment to pay the guarantee claims in time should come from the government. The pressure on the capital creation should be supported by the government. If because of the NPS, say today, if you look at the TransUnion CIBIL has released a report yesterday that every 2 out of 3 NBFC MSME will survive.
Correct.
Say, let me tell you that the pressure will get created only and only if the spent by the entrepreneur is not judicious. If the spent by the entrepreneur, it is judicious, and banks are cautious and are monitoring it properly, supporting that. Say, monitoring does not be done only with the view of being a skeptic about it.
Correct.
The monitoring should be done as a 75% partner. I'm giving 75%. You have got only 25% stake. I got every right to know what is happening.
Correct. Exactly.
That has
Exactly.
been
Absolutely.
my approach, let me tell you. And it doesn't mean that NPS have not happened, but yes, probably you could have saved the situation. So the bank should not be pushed to give a dole. The bank, I am very happy when I read today that banks have been asked to do a due diligence. In fact, there is one more sentence added that banks should do a due diligence to see that the requirement of the additional credit is reduced. It need not be 20% for all. It could be 10% for me. It could be 15% for you, 20% for somebody. Doesn't mean that everybody should get 20%.
Correct. Correct.
So that is the judicious way of credit dispensation. If it happens, I am very confident that things will not go haywire. If you don't do that.
So one last question and then we'll stop. This has come from a sector that has been hit very badly, hospitality. And this question is from Jimmy Mistry, and the question is, what is the chance for a one-time restructuring or for the hospitality sector or a scheme for the hospitality sector, given that we are still paying salaries? And
I strongly recommend they should be supported. And as I said that, look here, when I say that I have to lend, now in this 3 crore limits itself, what country has done, and very wisely, some wise banker would have given all this. You have you have capitalized the interest called FITL, fixed interest term loan. Okay, so that's the way the hospitality industry should be helped out. There is no way that the hospitality industry will not survive or will come back, and thus they should be supported thoroughly. I am one for it, and the bankers should take that call, provided bankers are also allowed to do that one-time restructuring of the sort which is required. Because if I was running my hotel at 80% occupancy, to reach 80% occupancy, I may take 8 months.
Correct. Correct. No, absolutely. In these circumstances.
So how do you envisage to go back to the level of 1st March where you were? My only humble request to all the entrepreneurs: look for an opportunity to survive and come back to your normal position, and don't look for an opportunity to have something more. I'm sorry to say that, but that is what unfortunately happened in 2008-9, that those who were not eligible for restructuring, they also said, yaar, humko restructuring kar do, 12 mahine ki chhoot de do. But what happened in the process, I had some liquidity with me, which I started pumping in something other, and wherefrom I got into problem. So my issue is that let's not kill the goose. And hospitality industry has to survive. This country, you can't say that you have got abundance of the hospitality capacity. The tourism will start. Hospitality has to survive. I don't see a reason that why it should not be held out.
Thank you, sir. So, sir, any final words for bankers? You've given some good advice to entrepreneurs, but to banker friends, because a lot of our...
No, I believe that banker friends have to primarily come out of their role of a lender and get into the role of a partnership. It means you must engage through the credit life cycle of a borrower, right from outsourcing to the repayment. It means how every activity is happening, the credit monitoring and all. Let me tell you that if you are able to do a good causative analysis of the problems, whether internal problems or external problems, None of the issue is purely on either internal or external. It is always a blend of internal and external.
Correct.
Thanks to the today's banker that enough databases are available for you to arrive at informed credit decision. I have been using this terminology for last 20 years.
Oh, absolutely.
That I will take an informed credit decision. Lending is my dharma, credit or risk taking is my dharma. If I don't take a risk, what am I for? I can't be credit averse, but I have to be credit cautious. I think that is my suggestion to the bankers. Those who are in service, they will say, "आप retire हो गए इसलिए इतनी बात कर रहे हैं." I'll request to go back to my history. I've been a branch manager in Mumbai at Opera House, Mumbai Samachar Marg branch, regional manager in Mumbai South, zonal manager for Mumbai, and ask my clients. But yes,
Thank you.
I have gone in depth into the shoes of the client and have not allowed the client to be fooled. As far as possible. I don't claim I was not.
Thank you so much, sir, for your time. I think very useful in times like this to share your wisdom and experience and insights, both with bankers as well as with our entrepreneur community. Thank you very much. We have a recording of this, sir. With your permission, we will put it out on YouTube, etc., for others also to view this. And our second webinar is on Wednesday next week between 3 and 4. And that is going to be, again, that's on the themes that you will like. It's called The Indian Economy, Battered But Not Beaten. So we're not beaten, we will fight back. And that is with our panelists that day will be Ms. Rajni Sinha, who is Chief Economist and Head of Research at Knight Frank India. So there'll be a lot of real estate questions.
Great.
So, sir, if you have the time, please do attend that. All of us, all of you on the guest.
Sure.
Thank you
My
so much
pleasure.
for tuning in today.
My pleasure. I
Thank you, sir.
will only leave a last word that take my suggestions in a right perspective. They were not to defend, but they were to take the things forward. I am a diehard optimistic that yes, things have a solution, but I must look for a solution and not the shortcut. Thank you so much.
Thank you, sir. Thank you on behalf of Rubix to all our participants. We really appreciate your being here. Thank you, and stay safe.
Thank you, dear. Thank you, dear. All the best to all participants.
Bye.